The stock is currently trading live at exactly $1.12, showing a completely flat performance of 0.00% on the intraday session so far. But do not let that stagnation fool you for a single second, because the pre-market data is already painting a violently different picture, with a bid up to $1.15, marking a 2.68% surge before the opening bell has even truly settled. What you are looking at on the screen is not just a penny stock hovering near a dollar, it is the calm before a potential volatility storm in one of the most controversial and closely watched transformations in the small cap market this year. When you see a stock like Strive Inc., ticker ASST, sitting motionless at $1.12 while the underlying news cycle is absolutely on fire, you are witnessing a tension between market makers trying to pin the price and a fundamental shift in the company's identity that investors are still scrambling to price in. The expectation for a stock trading at this level, especially one that was formerly known as asset entities before its massive strategic pivot, is that it is just another struggling microcap tech play trying to survive the NASDAQ listing compliance rules. Most people looking at this chart see a flat line and assume lack of interest or a wait-and-see approach from the street, but the reality is exponentially more complex and aggressive. This is no longer just a digital community management company. This has effectively morphed into a Bitcoin treasury vehicle, an aggressive bet on cryptocurrency adoption disguised as a traditional equity. The reality is that Strive Inc. is executing a playbook similar to other high-profile corporate treasuries, leveraging its balance sheet to hoard Bitcoin. And that singular fact disconnects its stock price from traditional metrics like PE ratios or revenue growth. You are not buying a service company here. You are buying a leveraged call option on the future of digital assets, and the market is currently paralyzed trying to decide if this is a stroke of genius or a dangerous dilution trap. Let's talk about the immediate price action, because that $1.12 level is acting as a psychological fortress. Over the last few trading sessions, we have seen ASST dip as low as 99 cents, testing the terrifying sub-dollar waters that often trigger delisting fears, only to be bought up aggressively back to the $1.10 and $1.15 range. This dip and rip pattern suggests that there is a strong institutional floor or perhaps a coordinated buyback effort preventing the stock from losing the NASDAQ compliance zone. The volume we are seeing, with millions of shares changing hands despite the price barely moving, indicates a massive transfer of inventory. This is what we call churn in the industry, where weak hands are selling out to longer-term holders who believe in the new Bitcoin treasury thesis. The flat 0% change you see today is likely an algorithmic peg, where high-frequency trading bots are soaking up liquidity at 112, waiting for a catalyst to either flush it down to $1 or rip it toward the 130 resistance. Now, we need to address the elephant in the room, which is the short-selling pressure. Whenever a company pivots to a Bitcoin treasury strategy, it immediately attracts a swarm of short sellers who believe the stock is overvalued relative to the actual Bitcoin it holds. They calculate the net asset value, or NAV, and if the stock trades at a premium to that NAV, they short it, expecting the gap to close. Right now, ASST is a battleground. Short interest has been creeping up, and the borrow fees, the cost short sellers pay to loan the stock, are likely volatile. You need to understand that when you buy ASST at $1.12, you're stepping into a ring with sophisticated funds that are betting the company will dilute you to oblivion to buy more Bitcoin. They are betting that the issuance of the new SATA preferred stock, which Strive used to raise capital, will eventually weigh down the common equity. However, the counterargument, and the reason retail investors are holding the line, is the squeeze potential. If Bitcoin makes a sudden move upward, the value of Strive's holdings appreciates instantly, forcing shorts to cover their positions regardless of the dilution math. This creates a powder keg situation where a 10% move in Bitcoin could theoretically trigger a 50% move in the stock as shorts scramble for liquidity that simply isn't there. This brings us to the fundamental reconfiguration of the company. Strive Inc., in its current form, is arguably one of the most daring experiments in the market. By merging the legacy operations of asset entities with the asset management philosophy of Strive, and then engaging in a pending merger with Semler Scientific, the company is trying to build a conglomerate where the primary asset is not cash, but Bitcoin. They currently hold over 7,500 Bitcoin, a staggering amount for a company of this market cap size. This turns the stock into a proxy. Why would someone buy ASST instead of just buying Bitcoin? Because institutions, pension funds, and certain retail accounts often can't hold crypto directly. They can, however, buy a NASDAQ-listed stock. Strive is positioning itself to be that vessel. The expectation is that they are a tech company. The reality is that they are a financial instrument. This discrepancy is why you see the stock reacting to crypto market flows more than its own earnings reports. Speaking of earnings, their recent Q3 financial results were released just days ago, showing losses, which is typical for this stage, but the market completely ignored the operating loss and focused entirely on the Bitcoin accumulation stats. If you are reading the income statement for this company, you are looking at the wrong document. You need to be looking at the balance sheet and the crypto custody reports. I want you to take a moment and comment below right now. Do you think the Bitcoin treasury strategy is a brilliant move for small cap companies to build value? Or is it just a reckless gamble with shareholder money? I really want to hear your take on this trend because we are seeing it more and more, and Strive is right at the forefront of it. Let's move to the SATA component because this is critical for anyone holding ASST. The company recently closed an IPO for its Series A perpetual preferred stock, ticker SATA. This raised over $160 million. This capital is what they're using to buy the Bitcoin. Now, why does this matter to you at $1.12? Because the existence of preferred stock creates a layer of capital above you. Preferred shareholders get paid dividends first. The SATA stock has a variable dividend, which makes it attractive to income investors, but it also means the company has a cash flow obligation to them. If Strive cannot generate enough cash or if Bitcoin stagnates, the common stock, ticker ASST, could suffer because the value flows to the preferreds first. But if Bitcoin skyrockets, the common stock acts as the leverage point. The preferreds are capped in their upside effectively, but the common stock has theoretically infinite upside if the treasury value explodes. This structural leverage is why ASST attracts such speculative volume. You are buying the tail end of the whip. If the whip moves a little, the tip moves a lot. We also have to discuss the retail sentiment and the personality factor. Strive is associated with high-profile figures and a very specific anti-ESG or pro-capitalism branding. This gives the stock a meme-like quality or a cult following that defies standard analysis. On forums like X and Reddit, the conversation around ASST is less about discounted cash flows and more about ideological support for the Bitcoin standard and the management team's aggressive stance. This sentiment creates a floor price. There are holders who will not sell at $1.12 because they're buying into the mission, not just the trade. This hold mentality reduces the available float, making the stock harder to borrow for short sellers, which again feeds into the squeeze narrative. When you see the price pinned at 0% change today, it might just be that the sellers have run out of steam, and the buyers are waiting for the next headline to push it higher. The technicals on the chart are fascinating. We are seeing a consolidation pattern. The stock dropped from higher levels, found support at $1, and is now coiling. A coil happens when the trading range gets tighter and tighter. Volatility decreases until the energy is released in a violent breakout or breakdown. The pre-market move to 115 suggests the direction of least resistance might be up. If ASST can break above 115 and hold it, the next major resistance is around 125 and then 140. If it breaks those levels, the algorithmic trading models that chase momentum will kick in, potentially driving it back toward the $2 mark. However, if it loses the $1 support, it enters penny stock purgatory, where liquidity dries up and it becomes very difficult to exit large positions. This binary outcome is what makes it such a dangerous yet compelling trade right now. Furthermore, we need to look at the macro environment. We are in late 2025 and the regulatory landscape for cryptocurrency has shifted dramatically. The integration of Bitcoin into corporate balance sheets is becoming more normalized, but it is still risky. Strive is betting that this trend will accelerate. If the government announces favorable tax treatment for corporate crypto holdings, or if new accounting rules make it easier to report crypto gains, ASST would be a prime beneficiary. Conversely, if a regulatory crackdown occurs, this stock would likely be hit harder than the spot price of Bitcoin itself because of the operational risks and the leverage involved. You are trading regulatory headlines as much as you are trading the stock. Another layer to consider is the pending merger with Semler Scientific. Semler is another company that adopted the Bitcoin